Ever wonder how the ultra-rich seem to just kind of like sail through any financial storm? Well, today we're diving into their secret currency playbook, focusing on the US dollar. And it's not just about making money. Once you reach a certain level of wealth, it's really more about protecting what you've already earned.
Yeah, you hit the nail on the head. It's fascinating how the ultra-rich approach what we call safe assets. It's a concept that's evolved over centuries.
Okay, so let me jump in here for a second. For our listeners, can we break down safe assets? What does it even mean?
Sure, sure. Think way back. Think like British consols or French rentes. Those were government bonds that, for the wealthy, were seen as like the epitome of stability.
It's almost like they were betting on like the most stable governments of their time, right?
Precisely.
So if those were the safe assets of the past, what's the modern day equivalent?
Well, today you see sophisticated investors, high net worth individuals really looking at things like covered
The
bonds
government bonds.
that
Oh.
offer a dual protection, you see. They're backed by both the issuer and a pool of assets.
So it's like a safety net under your safety net.
Exactly. You got it.
Okay, so even within these safe assets, there's still this concept of diversification, not putting all your eggs in one basket.
Absolutely. The ultra rich understand that true safety lies in spreading their wealth across a variety of historically stable assets. They're not putting all their faith in a single government or a single currency or even a single institution.
And this is where I think things get really interesting. It's not just about diversifying the types of assets they hold, but also where those assets are held. The sources point to a strategy that goes beyond borders, right? We're talking about offshore banking.
Yes, offshore banking offers a way to potentially sidestep the volatile economic conditions you might see in your home country, and let's be honest, potentially benefit from more favorable tax structures.
Right.
It adds a layer of complexity and, frankly, secrecy to the whole wealth management game.
Okay, but how much do we really know about offshore banking? I mean, the sources mention that reliable data is hard to come by. It's like this financial black box.
Exactly. It's one of those things that we know it exists, we see glimpses of how it works, but the full extent of its impact, it's largely a mystery.
It adds to the intrigue, doesn't it? But let's shift gears for a moment to something a bit more transparent, and that's estate planning. This is huge for the ultra-rich, right?
It is. And it's not just about writing a simple will, it's about creating a financial legacy that can last for generations.
Okay, so how do they approach this?
Well, think of it as financial chess.
Okay.
Sophisticated estate planning, it minimizes estate taxes and ensures a smooth transfer of wealth to the heirs.
So minimizing losses, maximizing generational wealth. It's
Exactly.
not just about the individual, but building a dynasty.
That's right.
But we live in a world where inflation is a constant threat. So how do these ultra-rich hedge against that, especially when we're talking about the US dollar?
Well, this is where you see a shift away from traditional assets and a move into the world of luxury investments.
Luxury investments, what do you mean?
Think art, rare collectibles, even vintage cars.
So you're telling me a classic Ferrari is a currency play?
Think of it this way. These items often appreciate in value over time, acting as a tangible hedge against currency devaluation.
So Picasso on your wall isn't just about aesthetics, it's a financial statement.
You could say that.
But these assets, while they can be valuable, come with their own set of risks.
Of course. Like any investment, you need to do your research, you need to understand the market, and you have to really be aware of the long-term trends that drive value in these alternative asset classes.
So it's really about understanding the nuances of these unique markets. But the world of finance is always evolving. And one thing that keeps popping up in the sources is this idea of central bank digital currencies, CBDCs. Could this change the game for the ultra-rich and their US dollar strategy?
Yes, CBDCs are fascinating. We're seeing some central banks, particularly in Africa, they're exploring CBDCs as a way to potentially improve things like monetary policy and financial inclusion.
Right.
So this could definitely have ripple effects on how the ultra-rich manage their assets globally.
But there are also concerns, right? I mean, cybersecurity risks, the operational hurdles of adopting a new system. It seems like that might make even the ultra-rich hesitant to jump in right away.
Oh, absolutely. It raises the question, will the ultra-rich see CBDCs as a threat or an opportunity? It's something we'll have to watch very carefully.
For sure. It seems like the ultra-rich are always looking for new ways to stay ahead of the curve. The sources mention another strategy, the carry trade, and I'll be honest, I don't fully get it.
Yeah, it can be a little complex.
So break it down for me.
Basically, the carry trade involves borrowing money in a low interest rate currency, like the Japanese yen, for example,
Okay.
and then investing that money in a higher yielding currency, like the US dollar. So you're essentially playing the interest rate differential for profit.
So they're borrowing cheap and lending dear. It sounds a little risky.
It definitely can be. Fluctuations in exchange rates can quickly wipe out any profits, and there's always the risk that the currency you borrowed appreciates, making repayment more expensive.
So not something for like the average investor to try at home.
Probably not. It's usually for sophisticated investors who have a high risk tolerance.
Okay, that makes sense. But this brings us back to the US dollar. Even with all this talk about alternative currencies and challengers, it seems like the dollar still has this kind of pull, this allure for the ultra-rich. Why is that?
Well, it's about historical resilience. I mean, the US dollar has weathered countless economic storms, geopolitical shifts, technological disruptions, and yet it remains the anchor of the global financial system.
And I imagine part of that has to do with the size and the liquidity of the US markets.
Right, and the political and economic stability of the United States also plays a major role.
So while other currencies might kind of flicker and fade, the dollar remains that steady beacon, attracting investors seeking a safe haven.
That's a great way to put it. But we also can't forget the impact of global economic trends on the US dollar. You know, things like inflation in other countries. How does that affect the dollar's value?
Yeah, the sources actually mention how inflation in Europe specifically is impacting the strength of the dollar right now.
Right, and that's a perfect example of how interconnected the global economy is. High inflation in Europe, it erodes the purchasing power of the euro. So the US dollar, comparatively, becomes more attractive.
And that increased demand then pushes up the dollar's value.
Exactly.
It's a constant push and pull, a global financial seesaw.
That's a great analogy.
But what about the role of technology in all of this? I mean, the sources touch on the growing influence of fintech and how that's changing the way we even think about money.
Fintech is game changer. It's making financial services more accessible, more efficient, more transparent. We're seeing the rise of things like mobile payments, peer-to-peer lending platforms, these robo-advisors that are popping up.
It's like the democratization of finance, right?
Yeah.
Technology giving individuals more control over their money in ways that, frankly, used to be only for institutions or the wealthy.
Absolutely. And it's only accelerating. We're seeing artificial intelligence, blockchain technology, big data analytics, all disrupting the financial landscape, creating both opportunities and challenges for investors of all levels.
So even though the ultra-rich might have access to these really exclusive strategies and resources, fintech is kind of leveling the playing field, giving everyday investors more control.
Absolutely. And that's a key takeaway for our listeners. It's not just about copying the moves of the ultra-rich, but being aware of the trends that are shaping the financial world, and then using the available tools and knowledge to make informed decisions.
Yeah, knowledge is power. The more we understand about currency, the better we can kind of navigate the waters. But before we wrap up, I want to touch on something the sources mentioned. And it's the psychology of currency. It's not just about numbers, right? It's about perceptions and emotions and trust.
That's where things get really interesting. Currencies, they're not just pieces of paper, they represent a social contract, a shared belief in their value.
And that belief is shaped by, well, so many things. Government policies, economic performance, even cultural attitudes.
Precisely. And that's what can make things unpredictable. You know, a sudden shift in sentiment, a loss of confidence, a geopolitical crisis. These things can trigger wild swings in currency values, regardless of the underlying economic conditions.
It's like a financial thriller, right?
Right.
One minute everything's stable, and the next it's complete chaos.
And that highlights the importance of understanding both the rational and the irrational forces that are at play in the currency markets.
So even the most sophisticated strategies can't fully account for the unpredictable nature of human behavior.
Exactly. And this brings us to a really crucial point: risk management.
Okay.
The ultra-rich, they might have vast resources, but they're still vulnerable to market volatility and unexpected events.
So even with all their wealth and expertise, they can't escape the inherent uncertainty of the financial world.
That's right. Risk is a part of any investment or financial decision. And regardless of your wealth, the key to success is understanding your own risk tolerance, diversifying your portfolio, and having a plan to navigate the inevitable storms.
Like that old saying, don't put all your eggs in one basket. But let's bring this back to the US dollar. What are some key takeaways for our listeners about its role in the global economy and its potential future?
Well, the US dollar, it remains the dominant force in global finance. It's a safe haven for investors, a key driver of international trade, and a symbol of American economic power. But the landscape is shifting. The dollar supremacy is being tested by new technologies, geopolitical realignments, and these alternative currencies that are emerging.
So while the dollar might not disappear anytime soon, its future really depends on how the United States adapts to these challenges and maintains its economic and technological leadership.
That's exactly right. And that's something for all of our listeners to keep in mind, regardless of their investment strategies or their financial goals. The world of currency, it's dynamic, it's complex, and understanding the forces at play is essential for navigating the path ahead.
It really is a constant dance, trying to anticipate that next move.
It is. And while we've mainly been talking about how the ultra-rich kind of navigate this world, it's important for everyone to remember that the US dollar's performance, it impacts all of us.
It's not just a game for the elite. What happens with the dollar, whether it strengthens or weakens, it has these ripple effects throughout the entire global economy.
Absolutely. It influences the prices we pay for just about everything, the returns we see on our investments, even job opportunities here at home.
So how can the average person make sense of all of this? Can we even use any of this to our advantage?
Well, you don't have to be a billionaire to apply some of the same principles that the ultra-rich use. Take diversification, for example.
The classic, don't put all your eggs in one basket advice, right?
Exactly. Spreading your investments across different asset classes can help to mitigate risk. And it's not just stocks and bonds anymore.
You're talking about those alternative investments we talked about. The art, the collectibles, even the classic cars.
Right. But it goes beyond that. Think real estate, precious metals, even cryptocurrencies.
Crypto, that's a whole other world. It just seems so risky and unpredictable.
They can be. But they also offer the potential for high returns. The key is to do your research, understand the risks involved, and never invest more than you can afford to lose.
That's good advice for any investment, really. But before we wrap up, I do want to touch on one more thing that came up in the sources, and that's this idea of shadow banking.
Ah, yes. Shadow banking. The financial world is always evolving, and this is a prime example of that.
To be honest, it sounds a little shady.
I know the term itself might sound a little ominous, but really all it refers to is financial activities that happen outside of that traditional banking system.
So things like hedge funds, private equity firms.
Exactly. These entities play a crucial role in the global economy, providing credit, facilitating investments.
But they operate with less regulatory oversight than traditional banks, right?
That's right. And that can be a cause for concern, as we saw during the 2008 financial crisis.
Right. When the collapse of Lehman Brothers, a major player in the shadow banking system, triggered a global economic meltdown.
Exactly. It was a stark reminder that the financial system is incredibly complex, it's interconnected, and even seemingly small events can have huge, far-reaching consequences.
So as we kind of come to the end of our deep dive here, what does all of this mean for our listeners? What are the key takeaways?
It means staying informed, understanding the forces that are at play in the global economy, the role of different financial institutions, the risks and the opportunities presented by new technologies like cryptocurrencies and CBDCs.
And realizing that even though we might not be moving millions of dollars around like the ultra-rich, we can still learn from their strategies.
Absolutely. It's about taking a long-term perspective, diversifying those investments, and always being prepared for the unexpected.
Fantastic advice. So to wrap up our deep dive today, I think the biggest takeaway for everyone is this. Knowledge is power.
I couldn't agree more. The more you understand about the complexities of finance, the better equipped you'll be to navigate the financial world and reach your goals.
And remember, this world of finance, it's always changing. So stay curious, keep learning, and be adaptable. Until next time, happy investing, everyone.